Hello, everyone. I'd like to introduce Martine Perron. She's been on before. And so today we're going to talk about the three reasons why interest rates are going down. So welcome, Martine.
Thank you, Mark.
So the number one reason, well, we've got Bank of Canada reducing rates. And, earlier this month, they dropped the rate down to 2.75, and they're going to probably reduce it again. And number two, the bond market's gone down because of the tariffs, and it's probably going to go down further. So, and that's putting pressure on rates to go down, especially the 5-year rate. And then number three, and this is probably going to be the most interesting one, is we've got bank competition.
Yes,
So let's start with number one. Tell us about the Bank of Canada. What are you expecting?
great question. Bank of Canada has been reducing the rate for the last couple announcements. And the reason that they did that is because the inflation is going down. And so as we see the price of gas going down, that's a really good indicator that the rates are going to go down. Usually oil is kind of like the biggest factor in that inflation. And so when that's go down, variable rates are going down. Usually, variable rates do not impact right away fixed rates, right? So when we hear in the news the rates have gone down, it's what we're talking about is the Bank of Canada rate, which impacts variable rates, line of credits. So as we've seen the price of gas going down, we saw the announcement um, with Bank of Canada. I do foresee more coming up as well.
Yeah, yeah,
And so
definitely. And
now and so now variable rates are almost more attractive than fixed rate.
what's the variable rate right now?
Yeah, so if someone has an insured mortgage, variable rates are around 4%. And for conventional mortgage, we're around 4.5%.
Okay, well, that's great.
Yeah.
And then what about people that got into variable rates 2 years ago? What are they paying?
Well, it's probably
Unsecured.
lower. Yeah,
Unsecured.
it's probably lower because the discount on the prime 2 years ago was higher. So we would have like prime minus 1.2 or prime minus one.
Yeah.
As of right now, it's prime minus 45 beeps. So the discount are smaller
So this
now.
is giving a lot of relief to people that were holding on to variable mortgages.
Yes, yes, because it's gone down quite a bit since it went up by 5%. So now the payments are being adjusted. It does provide some relief for from homeowners that have a variable rate mortgage.
Yeah, that's great, and then that's going to sort of add fuel to the real estate market because these people are going to start feeling more secure, and they're going to probably start buying again.
Yes.
So let's talk about number two, the bond market. I never paid much attention to the bond market. Being in real estate for 30 years, never paid much attention to it until last year. So how does the bond market affect the interest rate?
Well, so the bond market is the indicator the banks are using to lend the fixed money because that's the money they borrow at. And so when we see the bond under 3%, we can expect the rates to be under or closer to 4%, usually under 4%. The banks are not giving full discount always right away because they want to see that the bond has been down for a long time. But the bond has been under 3% and like even at 2.6% since the beginning of the announcement on the tariff.
Hmm. Yeah, that's really interesting. And I mean that's part of the reason why 5-year mortgages were so high back in December.
Yes, because the bond rate was over 3%.
Yeah, yeah. Well, that's fascinating. Now this is my favorite part. Number three is the bank competition, because I was so frustrated, seeing last year the rates going down, Government of Canada announcing these rate cuts, and then really not seeing that to the consumer.
That's right. That's right. Usually, and I find this like doesn't matter what type of market we're in, typically in December, the rates are high. In January and February, it's higher as well. It's like the banks are waiting to see how much money they're going to get from consumers investing into their RSPs before adjusting their rates. So January and February, it's two big months for people to invest money into the RSPs for the tax deductions. And so March is when the banks are like, okay, this is how much deposit we got. This is how much money we can lend. And now they adjust their rate and they're very competitive, especially larger mortgage amount.
Really? And so
Yes.
what would you say? So the banks are competing, love it, because we're starting to see lower rates. I mean, the rates we're
Yeah.
seeing today are are what the lowest rates in the last 3 years more?
Yes, it's the first time in 3 years that I've seen a conventional mortgage at 3.89. And that was for a $2 million mortgage. So obviously they're giving the bigger discount for the larger amount.
So $2 million mortgage, 3.89, is that a 5 year?
Yes.
Wow. Yeah, that's great. So we're going back to like we're at pre pandemic rates,
Pre-COVID. That's right.
right? Um, and so I expect the banks are going to get more competitive over the next couple months.
Yeah.
And so, that we're going to start seeing probably 5 year mortgages in the mid threes by what, July?
If we keep seeing the 5 year bound going down, the banks are going to keep being competitive because they want to have the market shares.
Yeah. So all this is great information for buyers. It's relief for people that have are on variable rates, and it's relief for people that got into low rates back in COVID times, and they're coming up for renewal this year and next year.
Yeah, there's a lot of renewals this year. There's a lot of renewals next year. And I reach out to my people and ask them to start doing a transfer 4 months before the date because that helps us track the rates. Once we have the
Oh,
file, right?
yeah.
Once we have the file, we can track the rates. And so they're not going to miss out on the opportunity to get a lower rate if, like, for 2 weeks in May, example, the bound goes down, but the renewal is maybe only in July. It's okay because if we have it on during that 4 months period, we're making sure that people will get the best rate possible.
So yeah, that's what I was going to ask you. What do you recommend? So if what you're saying is if you're going to be renewing, start the process now, get
Yes,
pre-approved. And so
yes,
as the rates go down, you're automatically locked into that lower rate. And we've seen it before where rates will go down and then there'll be a real low dip and then they'll go back up a little bit.
that's
And
right.
so if you are pre-approved now and there is that dip, that you're automatically you're going to get it and take advantage of it. And
That's
that's the
right.
same as buying. Like I was on the phone today with someone, they're talking about buying in July. I'm like, get pre-approved right now. Because as the rates go down, you'll automatically get that lower rate.
Yeah, it's a lot easier tracked if it's submitted with someone.
Yeah.
Yeah, and it's the best way to get the best opportunity. And if the rates keep going down, great. But if for any reason they went down and then went up, at least you're guaranteed that low rate.
And that could be a difference of 0.5%.
Yeah,
I mean, it could go down like, 3.2 for 5 year, that little dip, and then back to 3.5
yeah. It
or
all
4.
depends on economic factors and what's going to happen with tariff or maybe elections.
That's right. We're getting an election call on Sunday, so that'll be interesting.
Yeah.
Obviously, we've been in a tough market for the last 2 years. There is light at the end of the tunnel. I can see it. And, I'm telling people get pre-approved now, get pre-approved now, buy now, because guess what's going to happen when the newspaper starts talking about lowest rates since, 2021 or 2022. Guess what's going to happen?
Everybody's going to go shopping.
Everybody's going to go shopping. And when everybody's shopping, there, you know, and there's lots of people looking to buy, and there's lots of shoes outside that open house. You know, there's excitement, and people are funny when they get excitement. What do?
They buy based on emotion.
I know. Have you ever been to an auction? You know, and everybody's like excited and they're competing with each other. You know, human beings are really interesting. They love to buy and herd. It's a herd mentality. So, I mean, my advice, and this is going to be your advice too, is get pre-approved now. Start looking, and start buying now before everybody else does. And
Yeah,
this
I
is
think the best move is to save on the purchase price.
well, that's right. I mean, if you save 50 grand on the purchase price, and then in 3 months from now you close on your property and the interest rates has gone down, that's huge savings.
Yes,
Now, if you wait for interest rates to go down another 3 months from now, but the prices go up 50 grand, you're going to be paying more.
that's right.
Wow. I think we're onto something.
Yeah.
All right, Martine. Well, thank you. Do you have any questions for me?
No, I think we're good. Thank you for doing this.
We
Sorry for
are
my
good.
cold.
Well, thank you. We'll see you later.
Okay, bye,
All
Mark.
right. Bye now.